enhancement. This is again yet another draft framework that the RBI has introduced. Under the non-fund based facilities, there is a specific section on partial credit enhancement.
Right.
So we have with us the expert to explain us this concept. So I think I'll be asking you very basic questions as to what exactly is a partial credit enhancement that we'll be discussing today, who all can benefit from this, and who will be the users of this instrument. You could maybe guide us through the entire process flow and everything related to partial credit enhancements. Over to you, sir.
Let me start this way कि तुम्हारे सहारे का असर होगा तो जमाने में मेरा बसर होगा. अब सोचे कि मैं कहाँ अचानक शायरी में आ गया. तो द रेलेवेंस ऑफ दिस इज दैट बॉन्ड्स नीड सम सपोर्ट. हाथों के सहारे की जरूरत है. क्यों जरूरत है? लेट्स फेस द फैक्ट्स. So India's bond market, the investors typically are looking for a AA to AAA rated bond. There is hardly a appetite of investors for anything rated less than AA. हो सकता है for some extent people can go for single rated bonds, but anything single A, triple B, those kind of bonds, there is hardly any market. On the standalone rating of the issuer, bonds are hardly able to reach that kind of a rating because after all the rating agency looks at the quality of the issuer. Issuer may be triple B, issuer might be single A. So therefore, to be able to get our rating notch up higher than the rating of the issuer, there is no possible way right now. There has been this concept of partial credit guarantee ever since 2015. The guidelines are therefore not new, they've been there over the years. But if somebody asks why hasn't it been successful, because the guidelines in the past had an extent of impracticality, which is primarily connected with the capital requirements, but there were issues with the earlier guidelines, and therefore there was hardly any pickup. To best of my recollection, there's only been one issue in the past which has benefited from PCG, that too granted by a multilateral development body. But this PCG concept did not pick up. Now, the question basically is that why do we need partial credit support? Because it's a mode of enhancing the rating of the bond above the rating of the issuer. In the business of bond issuance, as I'm sure you understand, Anita, that in case of asset-backed securities, we are able to get ratings independent of the rating of the issuer. But in a straight on-balance sheet bond issuance, to be able to uplift the rating of the bond above the rating of the issuer, the only way is to lean on a third-party support. Now, here the third-party support comes in form of partial credit guarantee from I wouldn't use the word guarantee. Actually, it's not a guarantee, but in common parlance, we call it PCG, but here we're calling it PCE because it's actually not a guarantee. I'll come later on that. So with the support of a PCE provider, we are able to get our rating upliftment. You could probably ask, what would be the extent of upliftment? That depends on the thickness of the guarantee. Let's first understand that standalone basis, sense or minus the guarantee, the rating should at least be investment grade, should at least be triple B minus. From there, how much notch up do we get? Depends on the thickness of the guarantee and of course the strength of the underlying cash flows, etc., etc. Now the guarantee can be provided to an extent going up to 50%, which is quite substantial. Last version 2015 talked about 20. 20 is also not small. To my view, 20 is not too small. But 50, of course, more is merrier, and therefore 50 is definitely better. So we can think of a partial credit support to the extent of 50%. Now let's try understanding how does the PCE mechanism actually work. So straight going to first the mechanism, think of this. So here we're talking about, let's say, the bond issuer. The bond issuer has been, say here bond issuer is able to, okay, bond issuer which is basically able to issue bonds. The standalone rating of the bonds is triple B. Now we have an arrangement with the PCE provider. What does the PCE provider actually do? When it comes to servicing of the bond, servicing meaning what? Servicing could be in form of interest payment. Servicing could be in form of principal repayment. Principal repayment could happen. There might be an amortizing bond. The principal repayment can come in tranches, or the principal repayment might come at the fag end of the bond tenure. So whatever be the servicing requirement, should there be a liquidity strain for the time being on the issuer may draw on the PC provider's liquidity support. That is, to be able to meet the impending bond servicing, the PC provider may fill money in the DESRA account, from where the payments can go to the bond issuers. So bond issuers get uninterrupted pay, right? Now, if the PC provider has given the money, what happens to that money? First of all, had it been a case of a guarantee, one would have argued that the claim of the guarantor now becomes at par with the claim of the bond holder. Here it's not bond issuer, sorry, bond holder. Here it's not a case of a guarantee, it's called a contingent liquidity support, meaning you are able to draw from a contingent. मैंने कहा ना हाथ का सहारा, एक हाथ का सहारा आपको मिल गया कि अचानक आप लड़खड़ा रहे थे, आपको किसी ने संभाल लिया कि लड़खड़ाए ने, आप गिरे नहीं। अब आप ऐसा नहीं है कि आपके पांव टूट गए थे, आप लड़खड़ाए थे, आप पंगु नहीं हो गए थे, राइट? तो आप पंगु नहीं थे, लड़खड़ाए थे, तो आपको हाथ का सहारा मिला, यू बी एबल टू सर्विस द बॉन्ड्स विद इन सम टाइम, यू आर एबल टू संभालो योरसेल्फ, तो आप संभल गए, वेल यू आर able to pay the next servicing, you are able to do yourself. और जो आपने पीसी प्रोवाइडर से पैसा लिया था, you are able to pay it back within some time. So what is that some time? Within 30 days we should be able to pay back the liquidity provider. PC provider can pay the money within 30 days. Will the PC provider get earn some interest on this money? Of course he will get interest at the contractual rate. So PC provider fills in the liquidity gap, and therefore bond servicing stays uninterrupted. Therefore there is no default on the bond. Remember that ये liquidity strain होता एक दिन का क्या, एक घंटा का भी होता, पर टेक्निकली ऐसा भी हुआ कि 2 बजे का टाइम था, 3 बजे तक पेमेंट नहीं हुआ तो रेटिंग एजेंसी डिक्लेयर डिफॉल्ट। टेक्निकल ग्लिच के केस में डिफॉल्ट होगा ऐसा मैं नहीं कहूंगा, लेकिन बिकॉज ऑफ व्हाटएवर लेट्स से स्टॉपेज ऑफ फंड समवे, you are not able to service on the very day the servicing is due, rating agency parlance will become a default. आपका रेटिंग टूट के डी पे आ जाएगा। तो आई एम एबल टू से माई रेटिंग बिकॉज दो आई हैड अ टेक्निकल डिफिकल्टी, liquidity strain, I've been able to service, and therefore I'm able to retain my rating. Part 1, I have 30 days time to pay back to liquidity provider. अब within that 30 days I probably might be able to recover myself. अगर समझो कि next servicing date you are not able to pay the liquidity provider, to the extent of the 20, 30, 40% whatever support the liquidity provider gave, you can continue to pull money from the liquidity provider till you have exhausted the entire amount of the support, which might, depending on your terms, like I said, it can go eventually you've not been able to service the bonds at all. Month on month you kept on failing, or let's say on the ultimate repayment date you did not have money. So the PC provider would still be able to provide funding to the extent of the guarantee, and the claim of the PC provider will still be subordinated to the claims of the bondholders. That is, eventually the PC provider takes risk on the bond issuer, and if there is a collateral or security backing the bonds, the collateral will be realized, payment will first be made to bondholders. उसके बाद जो पैसा बचेगा, with surplus left after recovery of the, the underlying collateral, then the money due to the PC provider will be paid. So PC provider subordinated to bondholders, bondholders therefore are able to get a notching up of the rating. That's how the concept works. It's a beautiful concept, I must say. And given the fact that bond issuance in India, there is a little irony of the rules that large corporate borrowers borrowing more than 1000 crores are mandatorily required to move a part of their borrowings to the bond market. एक तरफ आपको कंपल्शन है, एट द सेम टाइम बॉन्ड बायर्स है नहीं, बिकॉज आपकी रेटिंग सिंगल ए डबल ए से ऊपर जाती नहीं है. तो इन द सिचुएशन व्हाट इज द रेमेडी? देयरफॉर पीसीई फ्रेमवर्क टू माय माइंड गिव्स अ ह्यूज impetus to the bond market in the country. So I am extremely positive, and the best part is that ये जो capital requirements का पहले एक technical गड़बड़ था, thankfully the new framework is aligning the capital requirements exactly with the Basel norms. So now the norms in India will be at par with global norms. Capital requirement is there on the PC provider, but it's not unduly high, and therefore it's quite a reasonable framework. So I'm very positive कि जितना जल्दी आए उतना जल्दी इंडिया में PC framework kick up ho. So Anita, you might also be wanting to.
Some basic questions.
Sure.
Who all can be the bond issuers? Who all can be the PC provider? And what is the benefit that because you mentioned that the PC provider will be subordinated to the rights of the bond. And what is the benefit of what is it that they are getting in return for providing this kind of a credit service?
Good. Take a question. Who is the फैसिलिटी प्रोवाइडर, पीसी प्रोवाइडर। पहले देखते हैं हु इज पीसी प्रोवाइडर, फिर देखते हैं हु इज द पीसीई बेनिफिशियरी। पीसी प्रोवाइडर कैन बी हु, इट कैन बी AIFI, for example NAFED, but the finance minister during the budget, finance minister talked about NAFED's PCG, but one of the, one of the agencies that I'm very optimistically looking at is NAFED. But then any regulated entity, be it an NBFC, can also provide an HFC I don't think would be finding it appropriate to their business, but larger NBFCs, because इसमें क्या होता है कि you are actually lending support basis the rating of the PC provider. So unless I have a triple E rated PC provider, it doesn't help to notch up the rating of the issue. So I must get someone like a triple A rated NBFC, triple A rated bank, or a triple A rated AIFI, or someone with sovereign support. NAFED का खास फायदा क्या है? There is sovereign support behind it. So I must have some strong entity which is providing the guarantee. So who can the provider be? Regulation permits just about every financial entity, but I would say financial entity with a very strong rating. Right? Part one. Part two, who can be the issuer getting benefit of the support? Any issue, any bond issuer, whether issuing bond for a project or issuing bonds for any purpose, so much so that even financial sector entities, there are some special requirements for bonds issued by financial entities, but even NBFCs, HFCs may also get the bonds wrapped. I'm using the word wrap, WREP, wrap, which is the more common international word for this kind of a guarantee. So the bonds can be wrapped by any strong entity, and the issuer can be any financial, can either be financial or non-financial entity, depending on who wants to issue bonds, move to the capital market with improvisation of rating. Your question also was that what is in it for the PC provider? What does he get? So PC provider, of course, will get a commission. This funding is, I would call it unfunded support. Unfunded, why? Because let's say I've given a 20% guarantee. I'm not putting in 20% money. The 20% money is still with me. I'm giving a guarantee. It's a backstop support. So my money is not utilized right now, but I will keep getting guarantee commission. अब देखिए इसके economics. If this guarantee helps me to improve the rating of the bonds, say by 3 notches, let's say my rating moves up from triple B to, let's say goes to, let's say double A. तो उसका हो क्या रहा है कि my bond issuance cost, because triple B bond is currently maybe selling at, let's say, something like 300 basis points, a double A bond might probably be able to sell at, let's say, 100 basis points. I'm able to get a saving of 200 basis points on the bond itself. Guarantees 20%, but 5 times of that is the bond size on which let's say I'm able to get 100 basis points saving. So relative to the guarantee, the saving becomes 500 basis points, 5% ki saving. So even if I pay 2% commission to the bond, to the PC provider, I'm still a net saver. अच्छा, PC provider को क्या हो रहा है? I'm able to get 2% of the guarantee. At the same time, my funds are with me. Even if I keep the funds locked, let's say in absolutely risk-free securities, adding the PC commission, I'm able to get a good, decent rate of return on my funds. Of course, I stand the risk of having to make payments for liquid. अब आपको देखना क्या है कि the bonds in question were triple B rated to begin with. Any PC provider who is in business of providing guarantees would basically look at the pool-based risk. When I am in business of giving guarantees, though every single bond I guarantee may get a liquidity call on me. So I have to actually assess the probability of default of the bonds. If the default at all occurs, it's actually liquidity support, not an ultimate money lost. But eventually in the scenario, the bond goes bad. Then what's the likely loss on account of deficit and recoveries that I might face? So as long as the guarantee commission are charged is able to compensate me for the expected losses, meaning probability of default multiplied by the exposure, the expected losses, it's still good business for the PC provider. It's a good business for the bond issuer. It's very good business for the bond investor. So it's like win-win game for all. So by moving the risk of the bond issuers to the PC provider partly, and therefore make the bonds marketable, palatable, attractive to investors, that's the basic idea of that. That's the basic economics of PCEs.
You have been using the word guarantee, but actually, is it in the form of guarantee?
No, it's not in the form of guarantee. It's what you call contingent liquidity support. The difference between guarantee and contingent liquidity support. If it had been a guarantee, the claims of the guarantors by way of what you call subrogation, the step into the shoes of the creditor, and therefore the stake or the parity of the priority of the guarantor would have been the same with the bondholders. Here we're not intending that. We're wanting the priority of the PCE provider to be subordinated to the bondholders. Therefore, the facility is in form of contingent liquidity support. From investor point of view, there's no difference. इन्वेस्टर्स को क्या फर्क पड़ता है, गारंटी के हिसाब से दो कि लिक्विडिटी के हिसाब से दो, आपको पैसे से मतलब पैसा आपको मिलेगा. But as far as the bond issuer is concerned, or rather the PCE provider is concerned, if there is a deficit eventually on the underlying bonds, the PCE provider will take it first before the bondholders take it. So it's a subordinated trade. Anika.
And you also mentioned about the capital requirements being aligned with the Basel framework. So maybe you could explain us the capital requirements.
Yes, a little technical point, but nevertheless for the benefit of our very articulate audience. Existing 2015 regulations क्या बोलते हैं? Existing 2015 regulations were probably not aligned with Basel because it was issued before Basel became the norm in at least in India. And therefore, what it provided was that because of PCE, if you are able to get a benefit in ratings, and therefore the aggregate capital requirements come down, including the capital requirement of the investors and the PCE provider, or the extent to which the capital requirements come down for the bond issuers, that would be the capital retained by the PCE provider. In essence, what the RBI was trying to ensure is that inclusive of the capital by the bond investor and the capital by the PCE provider, there is there's no differential in the capital requirements. You are able to, for system-wide basis pay, including the PCE provider, you are keeping the same capital as you would have kept had there been no PCE. So that was the capital requirement. Now the rules are aligned with Basel norms, which say that, as we understand, the rating of the bonds before the RAP was BBB. Well, it might be more than BBB as well. आपका जो भी rating था before PC, that rating will get the risk weight for the PC because PC is after all senior. So the tranche which is exactly below me, meaning the unwrapped or uncovered bonds, uski rating will reflect the risk weight of the PC itself, and that risk weight will be applied on the exposure, that would mean the extent of guarantee, multiplied by the actual capital requirement, for example 15%. That's a capital that the issuer will have to retain. Of course, this capital needs to be retained right through the tenure. कोई आदमी बोले कि the bonds are amortizing and therefore the extent of bonds continues coming down, but that does not impact the capital requirement because your capital may be needed right at the fag end. Who knows? हो सकता है last के दिनों में default करे bond issue. So the capital requirement will stay constant until the outstanding bond amount itself drops below the guarantee amount.
I think the last part that we would want to understand from you is the default scenario. Because since bonds have been issued and there is an obligation of the bond holder to service the
bond issuer to service,
bond issuers, and in case there is a default on part of the bond holder, then there is a support, the PC support that I will avail of. But then when exactly do I consider this as a default for the bond holder? And also on the facility part,
right,
when will there be a
when does it become
default
NP?
When
Sure.
I'm unable to pay back the PCE provider?
So let's look at first the bond investor, bond holders. Bond holders are being serviced. पैसा कहाँ से आ रहा है मेरे को मतलब मेरे पास पैसा आ रहा है. There is no default to the bond holders. As long as the bond holders continue to get servicing, there is no question of an NPA treatment for them. If there is no interest or principal coming, that would basically mean when the PCE has either been exhausted or the PCE provider itself defaults. Unlikely situation, but there is a joint default. Issuer defaulted and the PCE provider also defaulted. Very, very unlikely, but nevertheless assume that that happens. More likely, I would say the PCE gets exhausted. Let's say I gave it 20% support, 20% pura exhaust ho gaya. Normally, this 20% support also may be on a revolving basis. Mane, we will not aggregate what were the liquidity calls in the past if they've been later on restored. Let's say it was 5% was used earlier, then repaid, then 5% again used and repaid. I will not count that 5 plus 5 10. It's a revolving limit. I would say what's the maximum tap that you can make at any point of time. It can be revolving facility. That's purely contractual. So if the limit itself gets exhausted, the bondholder will not get the servicing. That's when the bondholder will call it a non-performing asset if the dues have gone beyond 90 days. So bondholders का NP होना is a very, very unlikely situation. That's part one. अब आपका सवाल ये है कि what about the PC provider? Will the PC provider call it an NPA? So there the prescription is that 30 days of the liquidity call, the bond issuer must replenish the money to the PC provider. And if 90 days from that, that would mean 120 days from the liquidity tap, liquidity drawdown. If the issuer has not been able to replenish the money back to the PC provider, the PC provider will recognize the facility as an NPA. That would mean that entire PC facility, say 20%, will become an NPA on which provisioning requirements will apply. Provisioning kitna hoga? 10% to begin with. So provisions will be called on the aggregate exposure, including the funded amount, which has already been tapped, and the unfunded amount, which is the off-balance sheet commitment. दोनों को मिला के will give a provisioning on the on the guarantee exposure. So that's the rule about.
I think there will be a lot of market participants who will be having a lot of questions. Please feel free to go to our website. We have a detailed writer and we have this presentation also uploaded. You can please put down your queries.
I just say one point before we wind up. Now, can the bond issued by financial sector entities, let's say NBFCs, HFCs issue bonds, can they also get the benefit of the guarantee? Answer is yes. There are some additional conditions. For example, the asset size of the issuer must be at least rupees 1,000 crores. The tenure of the bonds must be at least 3 years. The bonds must be issued to refinance existing facilities. There are some additionalities, but financial entities, NBFCs, HFCs can also be benefited by the PC facility. So it's something which can be benefiting the bond market in its entirety. It's a very welcome step, Anita, and we look forward to the PC facility being enabled soonest to see the needed fillip in the bond market in the country. With this happy thought, thanks everyone. Thank you.